So, Aurora, Americo just announced full year 2024 results that showed a doubling of EBITDA while production hit a 5-year high. What were the critical factors, in your opinion, driving these strong results?
Well, let's address two things. One of them is we had higher production, but you're also asking about our EBITDA. So let me break down this question for you. If we start with production, we have done a lot of continuous optimizations over the last 5 years or so at MBC that have built up to the production levels that we now have. We work hand in hand with El Teniente, which is where we get our material from, to understand their mining plan for the year, and we're constantly in communication with them to ensure that we can capture fully what's going on in their operation, and that we receive then the benefit of being able to process the full throughput of fresh tailings. And then on top of that, we add the processing of historic tailings as a second layer. Every year, our team continues to optimize their work and identify what tweaks can be done to improve our recoveries further. And most of these projects come to fruition a year later when we roll out our CapEx program. So there's always a lot of continuous work with that. Moving on to the second part of your question, the combination of strong production, stronger copper prices in 2024, and low cost is a perfect combination that drives for very solid financial results. And you mentioned a doubling of EBITDA, but I prefer to look at cash flow from operations as the metric that really tells you about our financial stability, financial health. And the cash flow generated from operations in 2024 was 2.14 times the cash flow that we generated in 2023.
Cash on your balance sheet has reached very healthy levels, and you'll be debt-free by the end of the year. Given Amerigo's three-pronged capital return strategy, what is the company's preferred mechanism to return capital to shareholders, and when should investors anticipate that money coming their way?
I've spoken before. We want to maintain $25 million in cash as our healthy cash reserve. When we get above the 25 million mark and with a healthy copper price outlook, we get into additional distributions territory. And as you mentioned, Dwayne, additional distributions in our case are share buybacks and performance dividends. So we are now over the 25 million threshold, and also the copper price outlook has strengthened from what we saw in December, from where we were in January. So we are in the sweet spot now to restart our buybacks. Buybacks don't eliminate performance dividends, and performance dividends don't eliminate buybacks. If current conditions continue or improve further, Amerigo shareholders should expect more buybacks and more performance dividends in 2024 than what we in 2025 than what we got in 2024.
So copper prices remain strong in 2025. What are your views on copper prices for this year? Are we finally seeing the initial markings of a prolonged bull market for the critical metal?
Look, we just completed our earnings call, and I spoke a little bit about that there. Our view on copper continues to be bullish, and this is based on the fact of just the disconnect between growing demand in both traditional and emerging sectors and a constrained supply of copper coming in from mine production. Just to give you some context, last year the average LME copper price, which is where we sell our copper, moved from 385 to 415. But there was a lot of volatility between the different months of the year. Our view for this year is that we will continue to see the average copper price build up, but we probably will also see added volatility in the process within from one month to the other. Let's put it that way. If you want a more specific answer than that, the consensus for the copper price this year started at 436 per pound. And that initial consensus tends to be a very conservative number. Everybody goes in with a high degree of caution. For example, last year when we had 415 average prices, the initial consensus was 389. So you can see that there was a gap of constrained optimism there. So my comment for 2025 is that we will be higher than 2024, and we will have, on average for the year, a higher average price than the consensus of 436.
Your cash costs decreased by 13% in 2024, an impressive result. Is this an indication that you're seeing a normalizing of cost inflation after the rapid increase in prices post the COVID-19 pandemic?
I wouldn't frame it that way, Dwayne. Cash cost is a unit cost, and given that our production increased significantly in 2024, it is logical that the cash cost would also be lower, and we knew that going in. Remember, in 2023, our production was affected by floods. In 2024, we were back in normal production. So when we issued our 2024 cash cost guidance, we knew that cash costs should be lower than in 2023. What is interesting to comment on is that we beat our own cash cost guidance. And we did so because we produced more than what we had expected to produce without incurring more fixed costs in doing so. We succeeded at constantly monitoring our costs to avoid any unnecessary creep up or unacceptable creep up of operating costs. And also because the Chilean peso was weaker than what we had expected, weaker against the US dollar, which is our reporting currency. So those three factors combined, higher production, cost containment, and a weaker Chilean peso contributed to that lower cash cost in 2024.
And finally, what are the team's priorities for Amerigo over the next 12 months?
For 2025, we will continue operating on our core principles. Our core principles are: we produce copper, we produce financial margin, and we do so without accidents and without environmental incidents. Those are the core principles that all of us at Amerigo and MBC have sort of tattooed on our wrists. That's what we live for. So if we focus on these principles daily, we will meet or exceed our production and cash cost guidance, which are our business foundation blocks. And as I mentioned in the earnings call, once you have those business blocks solidly established in front of you, that will allow us to continue to be a consistent and predictable compounding machine for our shareholders. So those are the objectives for the year.